Imagine you run a business and every day money flows in and out. What if you didn't know how to track it? One mistake could leave your business bankrupt. That's why debit and credit is essential for every business and individual, whether you are an accountant, entrepreneur, or a student. Why this topic is crucial. Debit and credit are the backbone of accounting, used in everyday transactions and in corporate finance. Without understanding this, you cannot make smart financial decisions. Knowing this opens careers doors, finance, banking, accounting, and more. What will viewers learn in this video? Detailed definition of debit and credit, golden rules of accounting with applications, understanding T accounts, journal entries and ledger entries, applying debit and credit in real-life business transactions, practical examples with interactive exercises, avoiding common mistakes beginners make, real-life case studies for better retention, a fun quiz at the end to test your knowledge. So stay till the end to uncover secret tips professional accountants use. What are debit and credit? Let's break this down with a real-world example. You run a small bakery. Every day you buy ingredients, sell cakes, and pay for electricity. These activities involve debit and credit. Simple definitions. Debit: an entry that increases assets or expenses or decreases liabilities or income. Credit: an entry that increases liabilities or income or decreases assets or expenses. Accounting equation recap. Debit and credit must always balance the equation. Real life examples: buying a new oven for your bakery. Oven assets, so it will be debited, and cash, it is also an asset but it will be credited. Taking out a loan to expand your bakery. Loan payable is a liability and we are taking it, so we will credit it, and the cash is an asset and it's decreasing, so we will debit it. Receiving cash from customers for a sale. So here the cash is an asset and we are receiving it, it means the cash is exceeding, so we will debit it, and the sales revenue, which is our income, and it's also increasing, so we will credit it. Key side. Every transaction impacts two accounts. One is debited and the one is credited. The golden rule of accounting. Think of accounting like language. You follow grammar rules to make sentences in accounting. You follow these golden rules to balance your books. Rule number 1. Personal accounts, people and organizations. Rule: debit the receiver, credit the giver. Example: if you borrow money from a bank is giver, so we will credit it. Your account is a receiver, so we will debit the account. Rule 2. Real account, assets and liabilities. Rule: debit what comes in and credit what goes out. Example: if you buy office furniture comes in, so we will debit it, and the cash goes out, so we will credit the cash or cash account. Rule 3. Nominal accounts, expenses and income. Rule: debit all expenses and losses, credit all incomes and gains. Example: if you pay rent for your office, rent expenses, so rent is an expense, so we will debit it, and cash is decreasing, so we will do credit, or we will put it into the credit account. Key takeaway: apply these rules in any accounting situation and you will never get confused about debits and credits. Real world transactions with debit and credit. Interactive example. Pause the video after each example and guess the correct debit and credit entry. Example number 1. You start a business with $20,000. Cash asset, so we will do debit, and owner's capital is a liability, so we will credit it. Example number 2. Buying equipment on credit. Here, equipment is an asset, so we put it into our debit account, or we will do it in our debit side. or accounts payable is a liability, so it's credited. Example number 3, paying employees salaries. Salary expense is an expense, so we put it into our debit side, and cash asset is we put the account or we put the cash into our credit side. Example 4, receiving cash payment for services rendered. So we are receiving cash, it means cash is increasing. So we put it into our debit side, and the service revenue is our income. We are also receiving it, so we put it on the credit side. Example number 5, paying a loan installment. Loan payable is a liability. So we will put it on the debit side, and cash is asset and it's increasing and it's decreasing, so we put it on the credit side. Comment your answers below for what happens when you sell for goods on credit. T account demonstration, journal entries and ledger. What is a T account? A T account is a visual representation of debits and credits. Left side is debit side and the right side is credit side. T account help track every transaction and ensure balances are accurate. Step-by-step example, paying employee salary of $5,000. So here in this account, we are paying employees their salaries. So we have two things, salary, which is our expense, and cash, which is decreasing. So salary, which means expense, and cash. So we debit the expense side and credit the cash side. Example, receiving $2,000 from client. In this, we are receiving, which means the cash is increasing, and from client, which means that revenue is increasing. In T account, we have two sides. The cash is debited from 2000 and revenue is credited from 2000. Practical tip for journal entries. When you make a journal entry, both debit and credit entries should always balance. In the general ledger, transactions are grouped by account type. Common mistakes beginners make. Mistake number 1, confusing debits and credits. It's easy to confuse when they debit or credit an account. Remember the basic rule and follow them carefully. Mistake number 2, forgetting the double entry system. Every transaction has at least two accounts involved, one debit and one credit. Mistake number 3, not keeping accounts balanced. When you make entries, always ensure that the debits and credits balance. Mistake number 4, ignoring the business context. Don't just follow rules mechanically. Understand how debits and credits affect the financial position of the business. Real life case studies. Real life example for practical application. Case study number 1, starting a new tech business. You start a tech company and invest $50,000 in the business. We analyze the debits and credits in real time. Asset increase and owner's equity increase. Case study number 2, expanding your retail store. You take out a business loan to expand your retail store and analyze the debits and credits involved in loan transactions. Liabilities increase and cash decreases. Fun quiz. What happens when you purchase machinery or credit? What is credited when rent is paid? What happens when you sell products for cash? Which account is debited when you take a loan? Comment your answers below and I will reply. Conclusion. Always follow the golden rules to make accurate entries. Debits and credits are essential to accounting and finance. Practice makes perfect. The more you use T accounts and journal entries, the more natural it will become. If you found this video helpful, like and subscribe to Learn with Eamon for more finance lessons. Till then, happy learning!